Hey guys, Eli here, and on this video we're going to be talking about profit levers. This video is actually from my course, Real Estate Photographer Pro, and I wanted to post it here for you guys because I think it is a really powerful concept to master if you already have a photography business or really a business of any kind. But even if you don't yet have a photo business, I highly encourage you to watch this to give you an idea on what to look for as you're growing your business. If you're new to the channel, my name is Eli Jones and I own a real estate photography company called Norman & Young that does hundreds of shoots per month, and I have fully scaled myself out of that business. And I now help people on TikTok, YouTube, and through my course build their own real estate media businesses. This video specifically is from my course and I hope you enjoy it. On this video, we're gonna be talking about something called profit levers. What they are, how they impact your business, and which ones I recommend pulling on to improve your business. But first, a quick backstory here on why I'm now posting this in the course and how it came to my attention. I read a lot of books in order to grow my knowledge as a business owner, and not all of them are directly applicable to one of my businesses, or at least I don't intend them to be at the start. I just read a lot and see what sticks out to me. So I was reading a book lately by a guy named Alex Hormozi, who has about $100 million net worth, and one of his first businesses was helping brick and mortar gyms scale their businesses. It's called Gym Launch, and I have that book linked below. I highly recommend reading it. But anyway, I was reading this book with no idea how it would impact any of my businesses. I just figured I'd learn from someone much smarter than I am and much further ahead than I am, and so I started reading it. And he's talking about the exact process he uses to scale his gym businesses. And the more I read it, after a couple chapters, I kind of figured out that if you just think photography business every time he says gym, a lot of the advice is really awesome. And a lot of the advice you'll already have known and already have experienced in your business. And so as the book progressed, I realized I was learning more and more if I just thought about what he was saying for gym businesses as if it was my photography business and how it would impact my photography business. And one of the big concepts he talks about in the book is this term he calls profit levers, which are variables you can change in your business that would impact your business. So a couple of them would be photo editing costs, average shoot costs, the number of shoots you do, different things like this. And what he talks about is that changing those variables, even if small changes are made, have the same effect a lever does. So if I pull down on a lever with 5 pounds of force, if I'm using the right lever, it could lift something that's maybe 20 pounds, right? So I put in 5 pounds of effort and 20 pounds is lifted. And that's how this actually plays out in our photo businesses. And so I decided to put together a spreadsheet that identified what I believe the profit levers are in our real estate media businesses and how it would impact our bottom line, just so I could play with it and maybe coach Jared a little bit once I learned a thing or two. So I built this spreadsheet, and I'm not very good at building spreadsheets, so it took me forever, but I built the spreadsheet and I started playing with the numbers. And the effects were crazy. Even small changes to photo editing cost or photographer cost if you have a scaled business, or number of shoots you do per month, or whatever other variables there are in your business. We've identified 7 that I'll show you in a minute. If you start making micro changes to those businesses, it can mean a big result, a much greater result in terms of your business's output, which is of course, the profit your business produces. So let's jump right into my screen here. And this is the spreadsheet I came up with. Again, it's not super pretty, but it gets the job done. Now, one thing I want to say before we actually dive into this spreadsheet is it's not meant to be any sort of profitability tracking or income and expenses. This doesn't replace any of that. It's mainly just a spreadsheet to give you an idea how small changes could impact your business, especially when a bunch of small changes are made together. And this spreadsheet is linked below. You can get a copy of it. The first thing you're going to need to do in order to edit this for your business, as it says here, I'd recommend watching this video, but I'm going to explain that here. This is just for future reference. You're going to want to go to File and Make a Copy. This is the same spreadsheet I deliver to everybody. So if you just started, or if you were able to start editing this, it would edit it for everybody. So the first thing you want to do is make a copy and save it to your Google Drive. Once you've made that copy, you are good to go. How this spreadsheet works is anything that is green is something that you are able to change. Those are those 7 profit levers we talked about. We'll get more into that in a second, but anything green you can change. Anything yellow is something you want to look at. That's the data that this spreadsheet is going to spit out for you that can help you make these decisions and see how moving these levers can impact your business. Anything else, do not mess with that. Don't input anything there if it doesn't have a color that's green, because this spreadsheet is based upon equations. And so if you start messing with stuff, it'll break those equations and the spreadsheet will not work. There's really 3 stages to this spreadsheet. So the first thing you're going to do is fill out this green information. Fixed expenses. This is obviously stuff that doesn't change every month. Your internet bill, maybe the cost of your office if you have one. Anything that you pay a set price for per month. Don't put editing costs in here. Don't put anything like that. that's going to be covered later. So fill that out. Again, doesn't need to be perfect here. In fact, you don't even have to put this to see the changes. Just the more data you put here that's accurate, the more accurate these changes will be to your business. Now, onto the profit levers, which are photo editing. You put in the cost you pay per photo, photographer costs, how much you pay your photographers per hour is the way the spreadsheet works. But even if you don't have a photographer, you still want to leave this in here because there are two types of income you make as a business owner. We'll talk about that in a minute. There's the income you make because you built a business. That's sort of the passive income, if you will, that is created as a result of your business. But there's also the income you make working in your business. And most of us are photographers. So we get two types of income. We get our business's income and the income we make as a photographer. Most of us just mentally combine those together, but I don't think we should. And I'll talk more about that in a minute. But either way, if you are your own photographer, put $25 per hour in here because that's about the average cost you'll pay to outsource your work to a photographer in-house that is going to be good and get the job done and stay for a while. So put 25. Average shoot price. If you don't know what this is not just your most common package. What you're going to do here is, and you don't have to go back a full year. You could just go to last month, for example, and add up the total revenue you made. So let's say you made $7,000 total last month, not profit, just the total amount of money your business brought in, and then divide that by the number of shoots you did, including reshoots. Anytime you drove to a house, that's the number you add up. So let's say it's $7,500 you made. I'm gonna do a little math here on the calculator, and you did, let's say 70 shoots. That's probably a little high, but let's do 50 shoots. Your average shoot value would be 150. So that's how you calculate that. Put that in here. Then you're going to put the average number of photos you deliver per shoot. Our average package is a 40 photo package, but our photographers often deliver between 45 and 48 photos. We believe in over delivering. And we'll talk about this in a second, how you just don't want to start yanking on levers because sometimes the levers are the reason your business is successful. So put in here what you think the average is. If on average you deliver 50 photos, put that in here. Whatever you think that is. Again, not super scientific. It's just for illustrative purposes. The next box is the hour, or the amount of time you spend per shoot. So 1 hour is what we allot for our photographers at Norman & Young, and they get paid for an hour. And we add in another 45 minutes drive time per shoot. And obviously that counts once per shoot. So if you did 5 shoots in a day, it would be 5 times 45 minutes, whatever that is. Last thing you're going to put in is the number of shoots you do per month. Again, this fluctuates, of course, month to month, but you'll still have an average. So if you've only been in business 1 month, put your last month. If you've been in business a year, take 12 divided, or take the number of shoots you did total divided by 12, or however long you've been in business, divide that, put it there. And that's going to spit out some numbers for you. It's going to spit out your net profit, which is your income as a business owner. This takes out the amount of money you made as a photographer. So 64 shoots per month, we made 11,520 total this month in this case. And then net profit is 5,000. And then we have net profit margin, which is just how much of the money that you make you keep. And then we also have employment income, which is the amount your photographer would have had to have been paid in order to fulfill these 64 shoots. Again, don't worry about how this is all working. You'll see how it impacts it here in a second. And that was $2,800. And if you are both the owner and a photographer, you have to add this one, and that gets you your total take-home pay, which is $77.86, with a profit margin of about 70%, which is not the topic of this video, but that is pretty normal for a single photographer, about 70% take-home. What you're going to do here, you have to fill out another green box once you put this in. This is where step 2 comes in. So step 1, fill out your info. Step 2, we're going to put in what the result is here. So our income as a business owner, which is this one, income as a business owner, gave us $4,986. So $4,986. Put that in there. Next thing we're going to do is put in our net profit margin as a business owner. Again, we're not considering ourselves a photographer here, even if we are, because that's going to be set. That doesn't change. So $43.28. Now, what we can do is that's going to give us a baseline here. So now we can start changing, this is the third step, changing these variables and see how it impacts our business. Here's what you're probably not expecting. Let's say, for example, via a small price raise and better selling or better packaging on HD Photo Hub, or overall more add-ons, you're able to get that average shoot price up. So let's say we were able to get that up 10%. Maybe we raised our prices 10%. Maybe we boosted our selling a little bit, changed some packages up. Whatever it is we did, the result, let's say we were able to get another 10%. So that'd be 198, I think. I don't know if I just did that math right, but that's about 10%. 18 more, yeah, 198. So all we did right there, the only thing we've changed in our business is moved our pricing up 10%, or moved up our average shoot price 10%. Maybe it was pricing 5% and sales 5%, whatever it is.
10% total change average shoot price. So you'd think, okay, I increased 10% of my revenue, which is what that's going to do. How much does that affect me? Well, it actually increases it more than 10%. It actually increased our revenue, or our net profit margin, which is our take-home pay, by 23%. So you can see that lever here. We put 10 pounds in to use that, and we got 23 pounds of force. We got 23% extra, but in this case, with this photographer doing about 64 shoots per month, we were able to make an additional $14,000 per year of profit. This didn't change our expenses at all. This brought home pure profit, $14,300 or $13,800 into our personal bank account. So that illustrates the point of a lever. If we were able to just raise our prices a little bit or do something that resulted in more, boom, we got a much greater result. But now let's start playing with some more of these at once. So we already adjusted our shoot price by 10%. Let's say we're able to save 10% on editing, which you could do that. You could find another editor, you could push some buttons and save 10%. And so what I'm going to do, let's see, 0.75 times 0.9 to get 10% less. That's going to give us an editing cost of $67.50 per photo. Boom. So round it up to 68. That's fine. Next thing we're going to look at is the number of photos we deliver per shoot. So we're delivering 48 usually. Let's say we're a little more careful and we narrow them down a little better. Maybe if we have photographers, encourage them to be more thoughtful, and let's try to deliver 10% less. We're still delivering over our average, which our average photo package is 40 photos, right? So our main photo package is 40 photos. Let's say on a 40, we're going to deliver 10% less, which would be about 5 less, which is going to be 43. So we've reduced that by 10%. I'm not going to mess with the photographer cost at all because Alex talks about this in his book, but if you're the photographer, it also doesn't affect anything. But it's not a good idea to necessarily lower your employees' pay, especially right now when you should be increasing it. So I'm not going to change that. But maybe you are able to reduce time on shoot a little bit. Let's say instead of 1 hour, we reduce that 10%. We average about 50 something minutes per shoot, so 0.9 hours. And we're able to, this is a big one that I think you can do if you're a solo photographer, is we're able to reduce our drive time per shoot, right? Because if we schedule more efficiently, or we do Tuesdays in one area of town and Thursdays in another area of town, we'll be able to reduce that. I'm not even going to do a full 10%. I'm just going to do 0.5 less. And what you'll see here is that some of these worked against us if we were the photographer to our total take-home pay, but what we're thinking about is as a business owner here. So I've made all those changes, and we're also going to assume that because we reduced our time on shoots a little bit, we could fit in a little more shoots, and we want to grow again by 10%. Growth is a big profit lever. Obviously more growth is better. That's the main profit lever I talk about pulling is volume, and we're going to pull that through in this spreadsheet. So we're going to add 6.4 more shoots, or just 6 to round it up. So a total of 70 shoots per month. We should be able to do this without hiring anybody because we've been more efficient with our scheduling. Again, theoretical. We'll talk about how to actually put this into play in a second. So I've made no changes more than 10% here, but I'm going to scroll down. Look at this. I've made it so with this spreadsheet, we're now profiting an additional 51.89%. That is huge. We increased our profits by half again, and in the actual end take-home result per year, we did $31,000 in extra revenue. I'm going to divide that by 12. That gets us $2,600 a month. That's a significant mortgage payment just by making less than 10% changes across the board in our business. And I think the result of this spreadsheet is not so much knowing, okay, I need to go in and run my business off a spreadsheet, because I think one of the things that's allowed me to be successful with Norman & Young is because I didn't run things off a spreadsheet. I thought about what our clients wanted. I cared about what was important to them, and I structured our business to benefit them. But there's always the other side of the story, which is I went all in on the not spreadsheet side of the business. Maybe it's a good idea to look at these spreadsheets a little bit. And we've done things like this in the past, but I've never looked at it in this way. And so I'm sure that as it was for me, it's probably going to be eye-opening to you already, or definitely when you put in the actual numbers here and see how you can make changes in your business. Again, I think the most important thing to understand here is we don't want to run our businesses completely off spreadsheets, but we don't want to run them absent any spreadsheet. So this shows you that small changes can make a big difference, even if the only small change you made. Let's do some other scenarios here. So I'm going to reset all these variables to what they were. So even if we just did some small changes that clients wouldn't ever notice, for example, we're able to reduce our editing cost 10 cents from 75 to 65. You can hunt around for a new editor. 65. and we were able to reduce the number of photos we delivered because we've been over delivering too much. We still want to over deliver, but we want to over deliver a little less to 42. You can see that just those changes brought us an additional 11% in revenue and $6,700 per year in profit back into our personal bank account. So even small changes like that can be really impactful. And that is the purpose of this spreadsheet, to first of all help you identify that the levers exist. Number one, those levers are real, and if you don't know about them, you definitely can't pull on them. Number two, to show you what pulling on those levers does. We've seen that 10% at a 70% margin, 10% more revenue makes us 23% more profit, so we could pull that lever. But number three, and this is where we are in the video now, what levers should you pull? I'm definitely not saying you should do what I just did here, which was run my business off a spreadsheet and mess with every lever. But you could do this second example, which was try to find a little cheaper photo editing, try to deliver a little bit less. You could maybe increase your average shoot price by not even raising prices. We'll talk about that in a second, but you could package your services more efficiently on your HD Photo Hub website. That's something we've been testing and we're going to release a video on soon. You could get a little bit better at upselling, for example. One thing we've learned is that when a client calls us, we make less money than when they book online. And obviously, if we know that, we want them to book online because that's going to drive up our average shoot price. But we also know that we don't want to annoy people by having them only book online. So we got to think of ways we can encourage them to book online and make it so they like that. We can educate them on why it's good to book online. We can share with them that if they book online, they can get real-time availability confirmed like that. They could book with their sellers. They could book at 3 in the morning when we're not available. So we would then know what changes to make in our business. We don't just want to pull on a lever and go, oh, average shoot price up, let's raise prices. We could look at other things. That being said, I do think everyone should seriously consider, if you are not near the middle, if you're below the middle of your price range, or even if you're at the middle and you're not yet at the top of the volume-based real estate photography market, you could probably raise your prices. That's one of the most powerful levers you could pull. The whole point of this video is to show you how these changes can impact your business. And the word of caution with this video is to make sure you don't just run your business off a spreadsheet. For example, we spend extra time at shoots preparing the house. That makes our business more successful, in my opinion, because it's something people say they love about us, and therefore it keeps them working with us, and therefore it keeps the number of shoots, I think the most important lever, up. So we don't want to sacrifice one lever that's more important by pulling the per shoot, hours per shoot lever and making it so we're rushed at shoots. So think about things through that lens. There's how can these small changes impact our business? But there's the other side of things, which is, if I pull too many of these levers, is it actually going to negatively affect other levers, or the most important lever, which is the number of shoots you're doing? Again, you could have an average shoot price of $3 million, but if you've not done a single photo shoot, it doesn't matter. So my belief is that the most important lever is the number of shoots per month, is volume, and we talk a lot about that in the course. But the second lever is price, is the amount they're paying per shoot. And that's something that this spreadsheet could encourage you to maybe look at, or to develop some ways to make it better. That's the main topic of today's video. Again, the spreadsheet is below. Play with this. See how it impacts your business. I think you'll be shocked, because I was shocked as I was building this and putting numbers in. I actually thought they were wrong a couple times because it seemed too good to be true, but the math checks out. This works. This is something that is true. So check the spreadsheet out. Play with it. If you guys have any questions, feel free to let me know. That's all for this video, guys. I'll see you in the next one.